Out with earnings this morning, record revenue, adjusted earnings per share for the third quarter beat the average analyst estimate. The company raised its full year earnings forecast for the third straight quarter. You cited a record pace for forward bookings and improving net yields. What's going on with the stock today? Why are people selling?
I don't know. To be honest with you, you gave some of the headlines, and truly it's only some of the headlines. I mean, we did set a record for demand for our yield, and that was across North American brands and European brands, both coming in 4% higher year over year, which is great consistency. We also saw that improvement was driven both by the ticket pricing and onboard spending. So all the trends that we have are really quite positive, and it's all helped lead to 13% ROIC, something we haven't seen since about 20 years now. The highest operating income and EBITDA on a per unit basis that we've seen in 20 years. Record net income. So the teams are working hard and delivering, over-delivering, and we'll continue to try to do that.
We're going to talk about all of that. Stifel, an analyst over at Stifel, pointing to a lower than expected fourth quarter net yields guidance. It's a measure of the amount of revenue you earn per available lower berth day. Are you just being conservative with this guidance? Because it sounds like things are going pretty well.
Yeah, things are going pretty well. It's consistent to what we said the guidance would be back in June, if you backed into what the fourth quarter would be. As a matter of fact, we kept the second half overall consistent to where we were in December, because we did experience a lot of volatility over the first half of the year, given macroeconomic and geopolitical events. But what we saw is, we've outperformed every single quarter, and that includes the third quarter, and we're going to work hard to try to outperform again. We're projecting yields in the fourth quarter, that demand to be, nicely over 4%, just like we ended the third quarter. So the trajectory is good.
Josh, great to have you here. And I'm looking at your share price for the year, up almost 18%, so easily outperforming the broader market. I mean, what's going on with the consumer? You guys track the ins and outs of it in terms of bookings, what the spend is on the ship, when they get off the ship. So I'm just curious, how do you characterize the consumer? And who's going on, who's jumping on board with you guys?
So I'd say the consumer is strong. I think that's a pretty consistent word that we've been using for the past couple of years. And yes, we do see ebbs and flows, and we see gyrations in the backdrop and the macroeconomics. But at the end of the day, what we have to offer is a very, very amazing value to what you can get by doing any other type of holiday, any other type of vacation, and people pay for it. And the great thing is, even though they're paying more for our experiences than they did last year and the year before and the year before that, the gap to land-based vacations is still huge. And so if there is a weakness and pullback in consumer sentiment, that bodes very well for us, because people are looking to stretch their dollar even further and figuring out, how do I get an amazing holiday, because I need one, and spend as thoughtfully as I possibly can. And we turn out very well when you line us up against the alternatives. What's
cool about talking with you, and I know Carnival is your big brand, but I mean, you have multiple brands, and I know you've consolidated in terms of some of the groupings, but you talked about positive momentum on all of the brands, or is there one in particular that you're really seeing some standout activity?
Well, we have as I said in my notes this morning, we have an internal leaderboard, obviously, with our 8 world-class brands, and we encourage the competition, and everybody sees who's on top and who's marching forward. And the 2 strongest brands on top of our leaderboard of returns are Carnival Cruise Line, which is America's cruise line, and AIDA Cruises, which is the equivalent in Germany. And the great thing is, as strong as they are and as high as they are, they're looking over their shoulder, because everybody is making improvement year over year, and that stretches across both North America and Europe as well. And the great thing is, despite the fact that we're showing so much improvement, only about half of our brands are back to where they were in returns since before our pause, before 2020. Only half of them are at their historical peak. So I know the latent demand, the latent potential that is in our brands, and they are marching forward at pace, and you can see the results on a consolidated basis for the corporation.
Josh, one of the things we always talk about is, and we have folks here who are They do one cruise, they do another cruise, they do another cruise. And I've been on a Carnival ship where
You're talking about Charlie Pellet.
I am. But I've been on an elevator where I've talked to people in the elevator and they're like, yeah, this is our 10th cruise or our 5th cruise. I am curious, what's the mix between new passengers who are experiencing Carnival for the first time versus those who are coming back for a 2nd, 3rd, 4th, 5th, whatever time on one of your ships?
Yeah, so I'll speak holistically and then I can get a little bit more specific. But holistically, we got about 1/3 of our guests at any one time are going to be new to cruise. And the remainder is going to be a mix of brand loyalists and those who cruise in general, and they might go on various brands and they're back on board one of our ships, one of our brands. It really is dependent on the profile of the brand and the cruise, because there is a huge difference between a 3-nighter quick getaway for the weekend out of Miami and going on a Cunard ship for a 120-night world cruise. And you can imagine there's much more loyal guests on the 120-nighter and much more first-timers on a 3-night weekend type of getaway. And the thing to keep in mind for us, because we have very, very measured capacity growth, we have no new ships next year. We only have 1 new ship a year for the next several years thereafter, going to Carnival Cruise Line and then shifting a little bit to AIDA as well. Our capacity profile is such that we're not looking for first-timers because we need first-timers to fill this hole that we see on the horizon. We're in very strong shape, and we're looking for loyalists and newcomers alike, and whoever wants to spend what we're looking to charge to get on our ships.